Welcome back to the future of investing. Today's episode is packed with insights on accessing pre-IPO investment opportunities, a realm traditionally dominated by venture capitalists. Samantha, what does this mean for individual investors?
It's a game changer. Individual investors now have entries into lucrative private markets. This shift is mainly due to regulatory changes and platforms like Investroom, which democratizes access, similar to how the internet opened global commerce.
But aren't there significant challenges in navigating these opportunities? The domain is quite volatile.
True, investing pre-IPO carries inherent risks. For context, while early investors in Amazon reaped massive rewards, those in Webvan, a dot-com-era pre-IPO darling, faced total losses. Balancing potential and peril is critical.
What forward-looking trends do you see in this space?
Expect AI-driven analytics platforms emerging, providing deeper insights into potential value of pre-IPO firms. Plus, global investor networks will likely unify, exchanging knowledge like never before.
Let's dive into how investors can spot high-growth pre-IPO opportunities. Samantha, what initial steps should they take?
It begins with evaluating market potential and competitive landscape. Think of it as navigating a map. Without understanding the terrain like industry trends or consumer needs, you're flying blind. A booming sector like renewable energy, for instance, suggests.
That's an interesting approach, but what about the hype around startups? Too often, it overshadows the fundamentals.
Absolutely, hype can distort actual value. In the late 90s, every dot-com startup was hot, but crash taught investors to emphasize sustainable business models and clear growth strategies. Conducting SWOT analysis, reaching stakeholders for real insights can safeguard against.
Looking ahead, will technology simplify this assessment process?
Definitely, tech like machine learning is already crunching data, predicting outcomes with remarkable accuracy. Future investors may rely on algorithms for nuanced analysis, akin to using weather forecasts for accurate predictions before embarking on a sea journey.
Understanding valuations in private markets is pivotal for pre-IPO investments. How do amateurs break down these complex numbers, Samantha?
Think of valuation as a puzzle. Pieces like projected revenue, industry conditions, and cap tables need assembling. Employing discounted cash flow models offers insight into potential financial futures. The Theranos case is a classic, where valuations soared despite lack of real products.
But aren't valuations inherently subjective? Can we truly rely on them to dictate investment decisions?
Indeed, they encapsulate educated projections, not certainties. Warren Buffett echoes this, their guesses with a greater understanding of error margins, akin to weather forecasting. Cross-referencing multiple valuation methods gives a more cohesive picture.
As we look to the future, how will valuation practice evolve?
Blockchain technology could revolutionize transparency, providing irrefutable data trails and mitigating subjective errors. Investors might gain unprecedented real-time valuation data, akin to live stock market tickers.
Investing in pre-IPO entities involves navigating unique risks and challenges. Samantha, what should investors particularly look out for?
First, liquidity risk is paramount. Unlike stocks, selling private shares isn't immediate. Regulatory risks with pending governmental changes can also impact exit strategies. For perspective, consider Uber. Lots of early investors had nervous rounds pre-IPO during regulatory stumbles.
Given these risks, how can investors cushion against potential losses?
Collaborative investor networks sharing diligence insights and AI-enhanced risk assessment tools are on the horizon. As the investment community grows more interconnected, resources for screening and sharing intelligence will likely assure smarter, collective